Well, Alphabet fourth quarter earnings just crossing the wire here. Let's get you those results. Q4 operating income, $35.93 billion. The street was closer to $36.95 billion. Top line, $113.83 billion in revenue versus an estimate of $111.4 billion. I'm just looking for revenue ex-TAC. There it is, $97.23 billion. The street was at $95.17 billion. Ad revenue, that looks better than expected, $82.28 billion. The street was closer to $80.89 billion there. Looking for Google Cloud, there it is, where of course Google competes with Amazon and Microsoft. Google Cloud revenue, $17.66 billion. The estimate was actually $16.2 billion. And now for capex, they see 2026 capex. It looks like they're calling for between $175 to $185 billion. Per Bloomberg, the consensus on the street was more like closer to $120 billion. And that perhaps explains the reason we're seeing a quick move lower here in the after hours by about 6%. Remember, of course, expectations for this stock sky high heading into this print. I mean, this stock was up around 80% in just the past 6 months. Investors had decided this one was an AI winner. It was a remarkable change in the story for Google in that a year ago, if we were talking, all the talk was here comes Sam Altman, here comes OpenAI, and what that means in terms of Google search. Google hit right back with Gemini AI models with AI overviews, and investors piled in and rewarded them for that. But now we see a quick drawdown in the after hours, perhaps on that capex number. Again, they're calling for 2026 capex. Companies saying 175 to 185 billion. The street had models closer to about 120 billion. Well, joining me now is Ivana Delevska, founder and CIO at Spear Invest, and Dan Flax, Neuberger Berman, senior research analyst. Welcome to you both. Ivana, I'll start with you. The stock is at a quick roughly 5% in the after hours. What do you make of those results?
From what I heard, Josh, it's basically all about expectations. I think expectations were high going into the quarter, and you really had to exceed by a lot this quarter in order for the stocks to work. So the fact that they came in line to slightly lower in some metrics plus the higher capex, I think that's probably driving the stock. I think for us, search is an important data point. Capex is important as it relates to the AI trade. We don't own Google, but we own a lot of the companies within the value chain. So I think the AI story is on track with those capex numbers that you just read.
Dan, I want to bring you in here as well. We're kind of yo-yoing here in the after hours. Looks like we're bouncing now down about 3%. Q4 revenue ex-TAC, Dan, that looks like a beat. I mean, $97.23 billion. Consensus was more like $95 billion. But that 2026 capex number, Dan, 175 to 185, when the street was closer to 119.5. Perhaps explain some of the pressure here, down about 2%. What do you make of it?
I think the results were strong overall. Clearly, there's focus on the capex numbers and, of course, the operating income. But I think the search business is healthy. And really, this company is continuing to reinvent itself, reinventing search with AI overviews, AI mode. Clearly, there's a lot of momentum behind Gemini. And so I think the company is investing from a position of strength. We remain long-term owners of the stock, as you know, Josh. And what I see here is a company that really sees the opportunity to play offense. They have the balance sheet and the free cash flow generation to support the aggressive capex. And so we continue to like the name here.
You know, it's interesting, and now the stock is down about 1%. It's amazing, Dan, just the story, how it shifted here, the narrative it shifted. You know, if you were talking 12 months ago, Dan, you remember that. It was like the fear around this name, that OpenAI was coming. They were going to crush Google search, which, of course, listen, that's the company's bread and butter. A remarkable turnaround, Dan. I mean, heading into this print, the stock was up about 80% in the past 6 months. What do you make of that turnaround? What do you make of that narrative shift?
I think it's being driven by the innovation, by the execution on the product cycles, really taking search to a new place. They're delivering value to users on one side with longer and more complex queries, and that creates value for the user. And then on the other side, they're creating value for the advertisers. And so I think the technology risk, and of course, the market's very worried about disintermediation and disruption across the space. Google is demonstrating that even with fierce competition, they can navigate and, in fact, capitalize on the opportunities from generative AI. And so when I look out over the next several months, I think this push and pull will continue. But Google, in my view, is able and has the pieces from the silicon, the data, the models, the products, and, of course, the users to really seize this opportunity to drive strong growth.
You know, we battled right back to the flat line here now, Ivana. On this higher than expected 2026 capex forecast, Ivana, let's say you were on the call. What would you ask executives about that?
Well, the key is going to be where the investment's going into, whether it's in hardware, is it going to be building out their own TPUs? I think that's one interesting angle of this story. I think they're going to make some really good segue into that market. So the question is going to be, where is the capex going? We really like the infrastructure side of the AI trade. We see the most upside there. We think a lot of these big capex numbers are translating in really big numbers for the value chain. So that's really where we're focused on.
Dan, how about Google Cloud? Revenue $17.66 billion. That looks better than consensus. How do you see, what are the trends in that business, Dan, in the year ahead?
Josh, I think the Google Cloud opportunity is tremendous over the next few years. When we speak to customers, they get a lot of value from the Google offerings in areas like analytics as one example. And so this opportunity remains incredibly early. The company has been building it under Thomas Kurian and the leadership team. It's ramping. Margins have been improving in the last few years. And so I look at this opportunity and see a $100 billion revenue business over time. And I think the story here, when you take the cloud and you take YouTube and you take search, it's this broadening of the growth drivers. And I think the cloud opportunity provides a level of durability to the overall company, which is, I think, important from an investment perspective.
Ivana, a lot of investors pile into Google because they see this as a company with the full stack, meaning they got the chips, they got the cloud business Dan was just talking about, they got the massive distribution. Does Google almost sort of stand apart in that?
Absolutely. I think they're really out of the mega caps. They're probably the best positioned one because they have the long-term moat that's backing up a lot of their businesses. So I would say absolutely they stand out on the full stack between the chips and the fact that they can easily monetize them even for their own use cases. I think that sets them apart. And they're able to basically offer the services for free where everybody else has to offer ads and other stuff into their products.
Dan, I know you like the stock, but after the run it's had, my friend, again, monster run, 80% in 6 months, Dan. Do you like it just as much here, Dan? How do you think about valuation at this point?
What we're looking for is the free cash flow generation over the next few years and really the growth rate of that free cash flow. We discussed the cloud business as one example where they've built an extraordinary franchise, which is actually very, very early. And I expect that as an example to generate a lot of free cash over the next few years. And so when I put the pieces together, I see a business that is likely to compound at double-digit rates for Alphabet as a whole. I think there's a lot of potential in newer areas, longer term, for example, with Waymo. And so the valuation, in my view, remains attractive here with a 1 to 2 year outlook because I think there could be stronger growth than the market expects. And I also think the business mix is becoming stronger and more durable. And so the key is coming out of this period, Google, in my view, will be in even better shape than it is at the present day.
Ivana, Dan mentioned Waymo there. We should note, Bloomberg noting just raised $16 billion at a $126 billion valuation. You're a longtime tech investor. How broadly excited are you about that space, autonomous driving?
Well, I think it's a very exciting space, George. The question is that we're still in very early innings. So I think we're still 5 to 10 years out from where we can really have autonomous cars deployed everywhere. And this goes along the lines with the robotics opportunity. I think both of them are very strong long-term opportunities, but there is really, the use cases that we see today are not really there to justify the next 2 to 3 years of return. So I think the application layer will be very interesting long-term, but it's going to come a little later in this cycle.
All right, Alphabet stock continue to yo-yo here a bit in the after hours. All eyes now, of course, on that conference call. Dan, Ivana, thank you so much both for your time. Appreciate it.